In Tax Court Memo 2020-76, Brannan Sand v. Commissioner, we learn about what a pretty firm line in the sand happens when you don't attach a properly completed Form 8283 when you're claiming a charitable contribution. Now, the Form 8283 is filled out differently depending on who's making what kind of contribution and what the value of that contribution is and what is being contributed. So in this case, we're talking about Brannan Sand was contributing a piece of property that they stipulated had a pretty significant fair market value, $200,000. Now, they donated this to a local water district in a complex three-way swap meet that is not even a part of the conversation today, but nonetheless, they were claiming they were giving 5,000 acre feet of storage for water storage rights, and it was going to be a $200,000 charitable deduction, which, needless to say, is significant. But what's interesting about the case is that the 8283 that was attached to the Form 1065 was filled out in a manner that was less than professional. It was incomplete, to say the least. The Form 8283 was attached without page 1, which is where you start, so that, is an indicator that we've got some issues. It included two page 2s. One of them included a handwritten note that said, "See attached appraisal," and an undated donee signature and donee acknowledgement. It reported that the donor's cost was none and that the appraised market value was $200,000 and that the donor purchased the property but failed to describe the property in detail other than Silver Peak's property. So that gets us off on the wrong foot. It goes on to report that the date acquired was variable and the charitable and was left blank as to whether the charitable contribution was made by a means of bargain sale. So we've got a question about how was the property even acquired and when. In part 3, we run into the issue of our appraiser not providing enough information about himself. He did not declare his name, signature, title, identifying number, address, all the stuff that you're supposed to put in about the appraiser, let alone his qualifications. And attached to the form was a 2-page letter from him, which he generously provided that would give us information about him. He did admit, though, he had no appraisal qualifications, but had acted as a litigator in some similar transactions, although he fails to go into detail as to what those are. Missing from the letter, of course, was additional information on the method of valuation or the specific basis for determining the fair market value of the property, the physical condition of the property, or that the statement that the purported appraisal was prepared for federal income tax purposes. Of course, he wouldn't include this since he has no appraisal qualifications and is not aware of what the requirements are for attachment to Form 8283. The comparable sale portion of the form doesn't get the math right. It goes on to talk about a similar piece of property that had been previously sold at arm's length that came in at about a value of $96,000, but our charitable contribution was $200,000. It gives no description as to why the discrepancy, where the discrepancy comes from, but it highlights the lack of credibility on the claim deduction, the judge said. So, at the end of the day, there's so much information missing from the 8283, and upon questioning in court, the taxpayer failed to provide substantial information to support their deduction, their claim for deduction, or that the appraisal that was attached to it was a qualified appraiser. In the end, the IRS wins. The appraiser wasn't qualified with respects to the specific contents of the property, and it was not reliable due to the failure of the information to be included on the Form 8283. Which brings us to the moral of the story. If you're going to contribute something of value that is non-cash, you need to make sure that the person who's appraising it, if it falls under the rules for appraiser, is a qualified appraiser for the purposes of claiming the deduction.